Welcome to Digital Asset News. Take the top stories in cryptocurrency and digital assets and break them down to bite-sized pieces. Today, there's only one story, in my opinion, and that is the Bitcoin halving. The whole thing is that the world is going crazy over this price, this Bitcoin halving, all the things that are surrounding it. So what we're going to do today is do a deep dive about what's going to happen, what could potentially fail, and where the price action could actually be looking at historical charts. I'm not a big chart person, but there is some relevancy there. So let's jump right in. But first, let's take a look at what's going on in the market right now. So Bitcoin doing really well. Look, it's at 9,300. So it jumped above that 9,000 resistance point, and that's great. Good for that. Ethereum still holding at 207. That would go up a little more. XRP, Bitcoin, and all that stuff. Bitcoin Social Vision. And not too much going on down here as much as we'd want it to. But one little thing there, Digibyte, it continues to make impressive runs. So good job for all the DigiBees. I do not own any Digibyte, but it's always impressive to me to see these projects jump. So let's get right into it, shall we? So before we talk about history, let's talk about what's going on right now. This is a story from Bitcoin. It talks about Bitcoin's order book is stacked with bids. And here's what that means. So Bitcoin has seen an influx of buying pressure over the past few weeks, and that makes total sense. This is a big type of event, so I would assume, or I would like to see, and I think that's what's going on, a lot of buy orders are happening. So while Bitcoin has stalled since reaching $9,500 last week, data indicates that there is still market demand for crypto. I didn't know it even made it $9,500. I thought the high was $9,300, but hey, there we go. This indicates that Bitcoin remains in an uptrend, making $9,500 just another pit stop before higher highs. BitMEX's order book is currently stocked to the brim with bids. As can be seen in the chart below, there is a clear buy-side skew on Bitcoin. And when I look at charts, sometimes I get confused. Thankfully, somebody put this in and talks about what is green and red. So the bids are indicated by the green lines, and the asks are indicated by the red lines above the price. So that's great news. Looks like we've got a lot of people who want to buy Bitcoin. Fantastic. Now it talks about Santiment, which is a market insights company working in blockchain, noting how their sentiment volume indicator is overwhelmingly positive. And this is the kind of data that I like to see. I like to see companies that are looking from the outside in, and they're taking a look at it and going, look, this is what's happening as far as the sentiment or as far as the emotional factor of what people want. I believe firmly that people are not rational creatures and they are driven by emotions. I mean, they'll make a purchase with emotion and then they'll back it up by logic. Case in point, someone can go out and buy a Tesla for $80,000 and they say, you know what, but it's got a really good safety factor. That's not the point. The point is you just wanted it and you just had an emotional attachment to it. And it's the same thing with these markets. Anyhow, they wrote this in reference to the chart below, which has shown that Bitcoin sentiment and social volume are near 2-year highs. That's always good to see. I like to see that because that means the price will go up because people are emotional creatures. As reported by Bitcoiners previously, the Chinese term for Bitcoin halving temporarily went viral on Chinese Twitter, Weibo. I had no idea that was a thing. Weibo, which has over 400 million active users, wow, that's pretty huge, briefly trended the term as the 6th most popular item on Weibo. So that's amazing. Similarly, we also observed that Google Trends indicates that the United States' interest in Bitcoin halving has gone parabolic. Simultaneously, interest in the term Bitcoin and buy Bitcoin has also increased. So let's take a look exactly what they're talking about. So this is Google Trends. I think anybody can access that. I don't think you need an account. But you can see it doesn't give you specific numbers, but what it's talking about here is, and this is just the 12-month view. So if we hover over the question mark, the numbers represent a search interest relative to the highest point on the chart for the given region and time. A volume of 100 is the peak popularity for that term. A volume of 50 means the term is half as popular. A score of 0 means that there was not enough data for the term. So as we can clearly see, let me move this up. Right now, as of this week, May 3 through 9, this Bitcoin halving term is the most popular it has ever been in 12 months. That's interesting, but let's take a look at the last 5 years. Boop. And let's see how that looks compared to everything else. And it is the most popular term in the last 5 years. Let's take a look since 2004. The Bitcoin halving term is generally the most exciting parabolic term right now on Google Trends for this search term. So I will leave it to you to make that interpretation. To me, it says that things are going to go a little crazy for a while, but we will see. Let's jump back in that article. Moving down, Dan Morehead, founder and CEO of Pantera Capital, states, it seems reasonable to say that if the new supply of Bitcoin is cut in half, talking about the halving, all else being equal, the price should rise. Most miners sell their block rewards as fast as they can. They need the money to pay for energy, data center space, and to buy faster chips in the never-ending arms race of Bitcoin mining rigs. When the number of Bitcoins they receive and thus sell is cut in half, it's got to have an impact. It only makes sense. We did a little dive into Bitcoin mining yesterday, yesterday's video. I will link it at the end of this video, but it looks exactly like this. And we took a look at the mining race, about what is happening in China, what is happening right now in New York, upstate New York, and what's happening in Texas as far as cheap electricity. And we did a live premiere, and I got to chat with a lot of you, which was fantastic. And a couple of you were actually miners like All Right Soft. Shout out to All Right Soft. He set me straight on a couple of different issues, and I got to tell you, it was interesting to see not just how the mining pools operate, how the miners operate, but what is going to happen during this and after this halving. So I can totally agree with Dan Morehead here. So for me, when I'm reading all these articles, I'm thinking to myself, wow, this is super bullish and everything is awesome. Everything is awesome, right? Well, let's take a look. Next up, renewed Bitcoin rally may be triggered by this $2 trillion investor cash pile. Well, that sounds good. Let's break in. There's now around $2.3 trillion sitting in money market funds and banks to re-enter markets. The U.S. money market funds, for instance, have attracted an inflow of $1.1 trillion during the coronavirus pandemic. Meanwhile, bank deposits has shot up to $1.2 trillion since stocks crashed in February. So people are taking money out of wherever it is. That could be cryptocurrency, that could be traditional markets, that could be wherever, and they are taking that money off the table, putting it in the bank, and they're sitting on their money because they're scared. And they don't know what's going to happen. And that's not a bad strategy at some point. But at some point, they're going to have to get back in the market. And where are they going to go? Let's find out. The Swiss investment management firm tracked hedge fund strategies to realize that they find risk on assets attractive at their lower positionings. It further noted that declines in the U.S. equities realized and implied volatility could lead institutional investors in favor of holding riskier assets. And you bet your bottom dollar, if you can take a look at hedge fund managers and just hedge funds in general, you have nowhere else to look but taking a look at Grayscale, their digital asset investment report, Q1 2020. And what it states, and I always talk about this, they have a total assets under management of $2.2 billion. Their first quarter of 2020, the majority of investments, 88%, came from institutional investors dominated by hedge funds. In the last 12 months before that, majority of investments, 79%, came from institutional investors dominated by hedge funds. So if you don't realize or don't think of it, the institutional investors are here. Now, there's a big question as to what's going to happen as the markets start to move, go up and down, what they're going to do. But I can just tell you, these hedge fund managers, they seem to like volatility, and they are investing heavily into this market. So that's a good thing, maybe. Let's move on. Statement here says this mountain of cash could be invested in the short term if the COVID-19 curve continues to decline, Unigestion told FT, and that is a big if, I might say. Analysts noted that easing lockdown policies could bring economies back in business, which would lead to up to a higher, if not the best, corporate earnings in the second quarter. So we're looking at May, June, July. Interesting. Helped further by accommodating central bank policies, U.S. firms have scope to give back employment opportunities long after witnessing a stunning rise in joblessness over $20 billion. Over $20 billion. So when they're saying this, when I read this the first time, I'm like, they make it sound like this is everything's gonna flip a switch, and just because there are certain states throughout the U.S. that are saying, yeah, we should open it back up the economy, they think it's just gonna be like it's going to happen automatically. It doesn't work like that. It doesn't work like in a quarter that everybody's going to magically get back to work and we're going to, have a magical amount of GDP. It's not going to happen. I think that the traditional market is very exuberant about what's happening. I just don't think it's going to last. But let me know what your thoughts are. Do you think that the market is going to stay this high, or do you think there is some type of correction on our way? Let me know. It's always interesting to read the comment sections. All right, moving on. States Bitcoin could benefit as well, owing to its long-term bullish scenario post-halving. Meanwhile, the cryptocurrency has tailed the gains and losses in the S&P 500 with a record positive correlation. And given the fears of the second wave of coronavirus, both retail and institutional investors could hold it for its short-term, higher risk-reward profile. So this is the thing. This is the thing that gets to me. I look at what's going on, and when you look at all the people that are so excited about the Bitcoin halving and we have to do it and it's going to be a big thing, sometimes when there is so much momentum going in one direction, it's not a good thing to be that lemming and jump off the cliff with everybody else. Sometimes, things do work out, but this is my scary thought scenario. What if investors are playing on the narrative of the almighty Bitcoin halving? That's in my thunderous God voice. And they're shouting from the rooftops from wherever they can. Not JP Morgan and Goldman Sachs. Those guys are just a bunch of liars. They'll tell them not to buy Bitcoin at all. But what if they're just shouting this and they know what's going to happen? It's going to drive people into the market and they go, you know what? Thanks a lot. Boom, dump. That's my fear. That's my fear for everybody. I'm not a big trader. I don't trade. I just dollar cost average. So it's not that much of a thing for me. I'm always waiting for the big downturn so I can put a little bit more in, but not so much. But I do wonder if that is going to happen. So let me know your thoughts in the comment section. Do you see it as that's what's going to happen after the halving, or do you think it's just an upward trajectory? All right, moving on. Market sentiment is very volatile. As such, the trajectory of global markets will depend on how the coronavirus pandemic fares after reopening economies tentatively. A medium-term loss of economic activity would end up reducing demand for all unnecessary assets, even Bitcoin. Look, I'm in El Paso for the last month and a half, and they just constricted again what we could do here. So some cities in Texas are open up, and there's a big, huge influx of businesses going on. But for here in El Paso, they're like, no, you need to wear your mask at all times. No social gatherings of any type whatsoever. And we're going to reevaluate even opening up any more businesses as of Friday for this week. So there's different areas where it's just different. And I don't know what exactly is going to happen. But we'll see. Anyhow, moving on, the massive injection of money by central banks can only delay a bear market. Should this bear market continue longer than it has, investors will dump their Bitcoin and stock positions to seek shelter in cash once again, just like we talked about with those bank deposits. So, question, do you believe this last statement to be true? Or have the retail and institutional investors realized that cryptocurrency is the only answer moving forward and that they must invest and that they must hodl and they will not dump after the halving? That's my question to you, but let's take a look at some history, shall we? So this is where it gets interesting. The halving, the facts, and whatnot. So markets are cyclical and history often repeats. Analysts also often warn that past performance does not guarantee future results. When it comes to Bitcoin, the cryptocurrency's hard-coding halving, lightning has struck twice thus far. The halving narrative is the most bullish thing going on for the cryptocurrency market. But these narratives are often used as sell the news events. Buy the rumor, sell the news. So here they go on to some TA, and every time I look at it, I just get sleepy. So I'll link in the description. You guys can check it out. But this next statement kind of just sums up what those charts were. On average, Bitcoin rose by over 324% from the bottom to the levels trading 1 week out from the previous halvings. Bitcoin is only up 189% from its bear market bottom of 3,200 currently, which I think is a pretty amazing statement right there. Bitcoin is only up 198% from its low 3,200. That's amazing in this market. It just is. Further on, it states, now that we have an idea of if Bitcoin price is pacing along with past cycles, what might we be able to expect if a similar surge takes place following the event? Well, it says here, and it sums it all up. Following the first cycle, Bitcoin price rose over 9,000% from the price traded at just 1 week out. During the second cycle, there was a slight drawdown following the halving, but in the end, Bitcoin price rallied over almost 3,000% to a new peak high from the price traded at just 7 days from the last halving. And the way they worded it was it's just very misconstrued, I think. So let's just make it simple, okay? So yes, it rose, 9,000% plus from the price at 1 week post-halving, which was $13.25 on December 5th, 2012. But it took 1 year from the first halving to reach that all-time high, that 9,000% increase to $9.94. So from $13 to almost $1,000, and it took about a year. So the first cycle, you had your date of halving, November 28th, 2012. Date of the all-time high, December 2nd, 2013. So that's about a year. So let's take a look at that price action. So if we take a look, November 28th, 2012, halving day, $12.25, roughly, right? So what's going on from there? Pretty flat. Not too much action. A little bit here. $12.25, $12.50, $13, $13.36, $13.62. So, and then $13.18. So it just kind of fluctuated a little bit. But you can see there's some increase in percentages, but it doesn't go parabolic. It takes a while till it hits to somewhere around January, February, March, because this is where it doubles, right around February or so. And then it just hits this peak and then boom, just takes off. Great. So let's move back here. So speaking of that, the second cycle, the date of the halving was July 9th, 2016, and the price was $6.52. That was the price, $650 roughly, on July 9th, 2016. Then in December 16th, 2017, it went up to almost 20 grand. So it took about a year and a half. Again, it didn't just happen right after the halving. It actually went down a little bit, and then it rose up. So let's take a look. So this is July 9th, 2016, and July 9th, 2016. 650, right? 650, again, the same type of thing. You got a lot of flat area here. So 650, 673, down to 655, 660, 551. So you can see like there's sometimes a little bit of loss, and that's to be expected. August 3rd, 593, 585, still hasn't come there, still hasn't gotten there. Went down, still isn't there, the 650. Now it's coming back up. And it took, you're looking at 4 months until it came back to that price. So that's how I see it is going to happen. You're going to see a lot of hype, a lot of things. People are going to buy in. It's going to hit. Then there's going to be a little bit of a correction. But then you have to understand, though, in the long term, Bitcoin and cryptocurrency, digital assets, whatever you're into, you're going to see these nice big peaks. Now, it's going to go down. It's going to go up. People are going to go a little crazy. But this is what we're all waiting for, aren't we? This big parabolic run. But you have to be patient, unfortunately. That is the big secret. Just be patient. And if you want to trade, go right ahead. I'm not. I'm just going to, as this time goes on, I'm just going to put in my $25 every week because I'm trying to be safe. And then just buy it here. And then if it goes up, it goes up. But I'm going to buy on the dips. And I'm going to buy on the dips here. But it's the same thing. Just keep buying, and then I'm going to wait, and then as the price hits, then I'm going to slowly sell. So that is what's going on with that halving. So lastly, I'll say this. So the first halving, it took a year. Second halving, it took a year and a half. So if you take the numbers, 1, 1.5, do you think the third halving it's going to take 2 years to the all-time high, or do you believe that there has been so much track laid? There has been so much improvement in the infrastructure of cryptocurrency digital assets and everybody's in line that is just going to take off to the moon? Or do you think it's a nice slow takeoff? What do you think? Let me know in the comment sections below. And that is it for the Bitcoin halving. And I usually have a better transition when I'm talking about these different stories, but I don't. So I'm going to go into a story about Ripple and Stellar. And I got to tell you, as far as like XRP people, you may not like this. So if you just here for the Bitcoin, that's good. If you want to keep going, might not like this next section. All right. So MoneyGram reports a quiet quarter for the Ripple partnership. And during an earnings call for Q1 2020, MoneyGram chairman and CEO Alexander Holmes revealed that it was quite a quiet quarter regarding the firm's partnership with blockchain payments company Ripple's XRP. He states, I would say it was a little bit of a relatively quiet quarter in the sense of really pushing anything particularly new into the market or expanding the service. We did a lot of that in the back half of last year and really got going on a number of new quarters for that service, Holmes noted. Despite expressing happiness with the deal thus far, Holmes continues to indicate that Ripple is still yet to solidify its service or target market. He states, we continue to flex them as they continue to expand the service and move things around. So I think it'll change over time. I think the results of what we're doing will vary by quarter and by month. Holmes' comments came shortly after Robert Lisf, the CEO of major U.S. Latin American remittance provider and Ripple partner Intermex, revealed that the firm's partnership will not see Ripple's technology utilized on its core markets. And he states, so you won't really see us leveraging Ripple in our core markets. I think it will bring us more growth in newer markets and places where we're exploring going into ancillary products. So here's my thoughts. To me, when I read this article, I just think to myself, it's amazing. It's amazing how one part here of Ripple's XRP, it's just not doing so much. It's just quiet. There's not really much going on. But on a flip side, it's going gangbusters and it's blowing up. And what I'm talking about is, this was an article originally in the Daily Hodl. It states Ripple and XRP power 179 million in cross-border remittances, an exponential 55,000% increase, and that is today. And this article states, company's co-founder and president Daniel Vogel says the remittances are rising exponentially in recent months. On the side of Bitso, we have seen an exponential increase in the process of remittances through the technology of Ripple, XRP, and Bitso. In April, we processed over 4.3 billion pesos. And then they actually give real numbers. Between April 2019 and 2020, they're all real numbers. The volume of Bitso remittances grew from $320,000 to $179 million, which is an increase of 55,000% plus. And that's huge. You have this corridor, you have Bitso, and they're doing so much. And then you have MoneyGram, it seems like they're just, a little quiet here and there. So I don't know if Bitso is doing so much type of transactions that, it's huge to them, or MoneyGram's like, not a big deal, or I just don't know what's going on. But it seems like the way that either the way that article was written makes it just very poor, or there is just something else going on behind the scenes. Anyhow, Bitso executive Barbara Gonzalez-Preseno said the solution offers tangible benefits, and she's talking about cross-border remittances with XRP. She states, we usually tend to see that a transaction, as we're seeing through ODL or on-demand liquidity, used to cost more than 5 times what it's actually costing them right now. Another one is settlement, which is almost immediate, which you don't see by any means in the traditional financial system, and I can only agree with her on that one. My bank, you guys know that I rip them all the time because it's amazing to me. I can send an email to anybody in the world and it gets there in seconds or minutes. But when I try to transfer any type of money from one bank in the U.S. to another bank in the U.S., it could take up to 3 days sometimes, depending on if it's the weekend or if it's a holiday or something like that. Or even on the weekdays, sometimes it takes a couple days. I'm like, what the heck is going on? Where are we living? What is the year? Are we in the 40s? So It just, this is one of those things where I'm perplexed. So the question I have is, will XRP be the standard for cross-border payments, or will they continue kind of limping along? Let's face it. These partnerships have been made, but it hasn't materialized a ton of tangible results. We hear good news all the time about XRP and Ripple. I know that they are different. One is a software company, one is a cryptocurrency. But it just seems like, the price action doesn't really move too much, and it's been a long time. So we see this great story about Bitso. We see this not so great story over here. What's going on? And it makes me think about, I hear other stories like this one with Stellar. Let's take a look. So This is from Forbes. Today, the Stellar Development Foundation announced a $5 million investment in Abra, a leading crypto wallet and exchange application. What's notable about the development is that it is a partnership between two organizations that share a deep-seated and profound passion around the role that technology can play in increasing worldwide financial inclusion. Together, the two organizations have the capability to jointly deploy a cheap and easy-to-access alternative financial infrastructure that can offer financial services to those that are unable to access a bank or live in countries that either have unstable economic environments or authoritarian regimes that restrict their activities. And I gotta say, I like that. I mean, it was a long, blunt, drawn-out sentence I had there, but it was very noble, I mean, to do that. So I know that there's some that subscribe that hate Stellar, some love Stellar, some love XRP, some hate XRP and Bitcoin and so on and so forth. So if you're going to say something negative about a project, just say why. Not that it sucks. I mean, that's just an opinion. Give me some facts. That would be interesting. Anyhow, Abra, founded in 2014 by Silicon Valley by Bill Barrett, former software engineer for Goldman Sachs, director of Netscape. 2015, the company initially offered a way for people to store and transfer money as easily as sending a text. Pretty cool in 2015, without the need for a bank account, and attracted $12 million investment in a Series A round funding. In 2018, Wall Street Journal identified Abra as one of the top 25. Since then, the company has completed a Series B and C round, filing its coffers with over $47 million of funding. Today, Abra offers a smartphone-accessible investment platform and wallet that provides the ability for customers across the world to invest in 100 cryptocurrencies and 65 fiat currencies. Abra has solved a major challenge in the adoption of crypto, Abra has solved a major challenge in the adoption of crypto, which is the high level of friction and complexity that is often associated with buying and storing them. So here's my question to everybody. Do you find it difficult to buy and store crypto? And I don't know where you're at. Statistically, half of you are in the United States, 12% of you are in Australia, and then there's a bunch more in Europe, some in India, and the Philippines. So that is my audience, essentially. So I'm going to ask you this. Is it difficult to buy crypto? Is it difficult to store it? Now, thinking about that, a lot of the countries I just mentioned, what about other places in the third world countries? Do you think in some places like Brazil and Venezuela, different parts of Iran, do you think it will be difficult for them to buy and store crypto? Just a question. Because the problem with me is that sometimes I get the horse blinders on and only think about myself. It states, for those that lack access to these basic financial services, cryptocurrency is a necessity. So here's my question, everybody. If you are being paid, let's say you're in a third world country, right? And you are the unbanked. You cannot get into a bank. They will not let you deposit because you don't have enough money. But if you're paid in fiat money, paper fiat, how do you get the paper fiat into this app? How do you do that? Is it like you would go to an ATM in the city or in wherever you're at and they have some small ATM, or and then you're able to deposit that way and then just turn to crypto and then turn on to the app? Or would you be able to buy a certain type of card in any of the stores? Because when we were in Rio, it was the same thing. You could take your paper money, put it in, and then get a self-paying card or a pre-filled card. So if it's that way, then I kind of get it. But then I think to myself, well, if it's a third world country and you're having a lot of problems, first of all, you got to have a phone. I don't know, how accessible those are in different countries, but if you have a phone, then you can use this. But then you have to buy the phone and so on and so forth. So that's my question to everybody. Is this even a plausible type of application? It might be. It looks good. We'll see. Moving on. With so many cryptocurrencies at its disposal, Abra had the pick of the litter when it came to finding an investment partner. However, during my interview with Abra CEO Bill Barrett, he emphasized that the shared philosophies of the two organizations around financial inclusion made the partnership a compelling match for both organizations. Then it gets interesting, because it talks about Stellar has been stoically working on expanding its network, working with partnerships that have included IBM and Deloitte, among other partners. We just did a video a couple days ago, and it looks something like this, where we talked about Hyperledger Fabric, IBM, and Stellar. And the question that I had was, does Stellar still have these partnerships going on, because Hyperledger Fabric, if you didn't watch the video, I highly recommend it, because Forbes took a look at the top 50 companies that were using blockchain, and I would say 80 to 85% were using Hyperledger Fabric. It is a juggernaut, and it is partnered with huge corporations and companies such as Walmart and Amazon and everything in between. So it doesn't get much bigger than that. And it's interesting because Hyperledger Fabric, it is a centralized permissioned blockchain. And so when I hear about Stellar and they have their aspect of trying to bank the unbanked, I'm like, what's going on with that, and why are they doing that? So it was interesting. But thankfully, with this Forbes article, I think I got my question answered. So it talks about the network is getting traction. In a recent announcement, Interstellar, its commercialization arm, headed by ex-Zelle founder Mike Kennedy, announced a partnership with a Southeast Asia conglomerate to bring a $50 billion of annual remittance transactions onto the Stellar network in 2 years' time. So that answered my question. I'm like, oh, well, this is that's that other part of the Stellar arm. Because one, it sounds like it's a nonprofit trying to bank the unbanked, and the other one is trying to build it up as massively as possible, which is led by ex-Zelle founder Mike Kennedy. And when I heard this, I'm like, you know what? I like teams. When you bring in smart people better than yourselves, and put them around you that are successful, you become successful. It's like one of those laws of attraction. So when I hear something like this, I'm like, I like that. That is a smart business decision, and I like smart business decisions, and I like to invest in companies like that. So when I'm looking at this, I'm thinking to myself, Stellar's looking pretty attractive. Moving on. Whereas Interstellar's focus is commercialization of Stellar, the nonprofit Stellar Development Foundation, which has made the investment in Abra, has a different mission. The foundation is looking to create equitable access to the global financial system. That means that the Abra partnership is much more aligned with a goal with making the world a better place than generating profits. And now I know Ripple has a charity organization, but it's different to have a charity program where you just donate, parts of your proceeds, which is great. I mean, that's fantastic. But it's a lot different doing that than taking a whole arm of your institution, your corporation, and saying, we are going to use all of our power to empower people, especially financially, and banking the unbanked. I think it's a very noble cause. What can I say? So what's next? Neither Barhat nor Dixon would be drawn on what specific new innovations we are likely to see as a result of the new tie-up between Abra and Stellar, commenting only the partnership would focus on the shared mission of financial inclusivity. That suggests that Abra and Stellar will continue on their mission to bank the unbanked. So here's my question, last question of the day. So why do you believe this partnership happened? Because what's the benefit? What is the benefit? Because Abra already has cryptocurrencies. It has that market for it, unless they want to do some kind of different thing. So what's the benefit? Why do that? Is this something that's going to be fantastic and lead to a huge market share for both of these companies, or is it just smoke and mirrors and just something nice to do? Let me know in the comment section below, and that is it for today's video. So look, thanks for sticking with me. I really appreciate it. If you like these types of videos, I'm gonna link the two that we talked about. One about the mining, and also the one about Hyperledger Fabric and IBM and Stellar. I'll link those two at the very end, and that's it. So thanks for sticking with me. I'll see ya on the next one.